One thing the Ramseys all enjoy, and certainly Rachel's husband Winston and I enjoy, is real estate, and we love the real estate market. I like building things and buying things as part of my almost, if I had a side gig, I guess that's what it would be. I've had something under construction for about 6 or 7 years now. Next week I will finish a project, and it'll be the first time I haven't had a construction project going in 7 years.
In a long time.
Yeah.
You like it.
I'm overdue. I need to find something to stick in the dirt somewhere. But the real estate is fun, and it's pretty confusing out there right now when you're thinking about buying a home.
It's hard.
There's there's a lot of emotion around it.
It's hard, yeah. Interest rates not only are up, but houses themselves, like what you're buying, the price of a house versus what it was 10 years ago, 5 years ago. You're just like, oh,
3 years ago, 2 years ago.
So it's just, it can feel like one of the most defeating subjects, I think, financially right now for people, where they think, oh my gosh, I don't know if I'll ever own a home, right? Like this kind of negative mindset because of how hard the numbers are. Right. It's real.
When you adjust your income and you adjust where you choose to live in order that you can get your income in a place in ratio to the house price in the area you're choosing now to live in order to buy a house, then you put yourself in a position to do that. And it can still be done, and we still have people on here in their 20s that have bought homes and paid them off. We had people on 26 years old did a debt-free scream house and everything the other day. So it still is being done, but it's a very I think it's as much it is mathematically tough right now. It is economically tough, but I think more than those two, it's just psychologically tough right now, because there's just this perception, this dark cloud over the subject of buying a house right now. And houses are selling, and houses have not gone down in value. There's still a shortage of housing.
They've not gone down.
They've gone up in value. Well, I mean, there was a time, 18 months ago,
everybody said there's a bubble.
They said they were going to crash.
Yes.
I'm just going to wait till house prices come down. They're not going to come down. We told you. And they haven't come down.
Yes.
They've gone up. We told you this. We've told you and told you and told you and told you. So here's some good rules of thumb if you're buying a house. Don't buy a house, and we've said this for 30 years. This hasn't changed. And it'll help you get the house, by the way, until you get out of debt. Don't buy a house where you have to buy an extra bedroom for Sally Mae because you had a student loan so long you think it's a pet. You're sitting there with stinking car payments around your neck, a bass boat payment, and paying for last year's Disney vacation on your credit card, and you can't figure out why you can't afford a house. Well, I just told you why you can't afford a house.
You don't have to go after Disney.
You're stinking overspending. Well, I can go after Ford, but I can't go after Disney.
The beach.
What's wrong? Okay, go anywhere you want to go, but you're spending money you don't have to do crap you don't need to be doing. And you go in debt to do it, and then you're broke, and you can't figure out why you can't buy a house. So the first thing you got to do is clean up the debt. You get out of debt, and you build an emergency fund of 3 to 6 months of expenses. No time in 35 years that I have said that formula did anybody like it. 100% of the decades that I've been doing this show, people went, well, that's not very realistic. No, but it's smart. Because if you move in a house without an emergency fund, your hot water heater will go out that week. And the next week, the roof will leak. You're going to learn about home ownership, baby. Murphy, if it can go wrong, it will come visit you. And if you want to do it really right, I'd love to see you put down 20%. Now, first-time home buyers, that's very difficult. A lot of first-time home buyers listen to Ramsey. We don't yell at you for putting down 5 or 10%. But here's the reason we say put down 20. Because you avoid PMI. Private mortgage insurance is insurance that pays the bank in the event they have to foreclose on you and they lose money. It's foreclosure insurance is what it is. And it's not for you, it's for them, but you have to pay for it. And it's about $75 per 100,000 per month. So we're talking like, $225 a month for a $300,000 loan, just for the PMI, because you don't put down 20%. So that's a big deal. Now, so that's why we tell you to do that. Now, we understand some of you are going to pay PMI, but I'm just telling you, you can't just automatically sign up for something that expensive and not know what you're doing, because it benefits you zero. It's for the bank. You are paying for the bank's insurance policy to cover them in the event you get foreclosed on. Then figure out 25% of your take-home pay and never have a payment more than a fourth of your take-home pay on a 15-year fixed rate mortgage. Not adjustable rate, not a balloon. Have y'all noticed rates are going up? Why would you sign up for a rate that goes up? That's what your adjustment's going to be. That's just dumb. Don't do that. Well, they might go down. Yeah, they might go down. Then you can refinance. So you date the rate and marry the house. Get the right house, and if the rate goes down, refinance. There's your adjustment. But don't let the bank pass on the risk of higher interest rates to you with an adjustable rate mortgage so you can get a cheaper rate so you can get screwed later. You're kicking the can down the road and you're going to get your face kicked in. Don't do it. Don't do it. This is straight, guys. I'm just telling you. I want the house to be a blessing, not a curse. And I meet too many people that their home is a curse, all because they said in the name of, it's always smart to buy real estate. No, it's not. When you are broke, in debt, don't have an emergency fund, and sign up for a mortgage payment you can't afford, that is not smart real estate. That's going to slow down your wealth building, bring anxiety to your home, stress to your relationships. It just takes all the bad stuff out. I mean, it brings all the bad stuff in.
Yeah. And I think that this part of the formula is where people feel like, oh my gosh, like as they run out their income of $70,000 or whatever it may be, their household income. But the truth is, even though incomes, because wages have not kept up necessarily, right?
No, they haven't.
They haven't kept up. So that means getting into the market, it's going to look different than it did 3 years ago, to our point earlier. Yep. And so there is a part of that sucks. And I think, we have felt that feeling with inflation. Like there's things that happen that we don't have control over. But doing this, it allows you for especially this 25%.
But here's an accurate appraisal of that, okay? Wages have not gone up as fast as prices and interest rates, which means you can probably no longer afford the home that you
live in right now. That's how,
you
literally.
can probably no longer afford the home that, that's just interest rate only there.
Yeah.
Okay.
Yeah.
That's not price. But you can probably no longer afford the home you thought you were going to get.
Yes, I think that's it. And it's
so
adjusting.
You're probably not moving in that neighborhood. You're probably moving in a different neighborhood, or you're moving a little bit further out of town, or you're going to compromise somewhere else in order to become a homeowner. Later, it's not like none of this is forever.
Yeah, right.
You can move again later when your income comes up and you make some equity on the purchase of the home.
Yep.
And because boys and girls, you never have a forever home. The only forever home is heaven. That's it. That's your only forever home. Because as soon as you build your forever home, as soon as you build your dream home, your dreams will change. You build your forever home, your kids are going to grow up and leave if you're a good parent. They're going to leave. And so then you've got this big old house, and there you go. So, okay.
Yep. It all
You need to make sure you're on top of your closing costs. You need to factor in the other home insurance ownership costs. People act like you have extra costs when you own that you don't have when you rent. Maintenance, utilities, all this. And we always tell you to do a Fannie Mae, a conventional mortgage. FHA and VA are more expensive mortgages in fees and in interest rates than a Fannie Mae, the conventional mortgage. So do a conventional mortgage. And if you're going to get into this real estate market, and now is a really good time actually to get in.